It's probably because my photo was not being shown there. Let's see if that works. Sorry, everyone. Just 1 second here. All right. There we go. Now it's working. All right. Well, for those who are joining on the stream, apologies for the technical difficulties there. Pretty much, all we've covered so far is the Powell speech. He's not worried about inflation too much. He thinks that the tariff inflation is essentially a one-off thing, which kind of echoes their transitory remarks that they, were talking about, back in 2021. And you're really seeing a lot of similarities right now between what's happening in the markets now in 2021. I mean, Ethereum, new all-time highs. I really appreciated this meme right here. I got a laugh out of this one. But yeah, I mean, it was so funny how I think it was earlier this year where Ethereum was getting dunked on. All of the, which, it's understandable because when you go to a chart of Ethereum here, I mean, it was pretty much one of the worst performers. Let me see if I can pull it up. Yeah, I mean, essentially during this period right here, from December of 2024 until about really May of this year, so it had 6 months of just being a dog. And then this was the inflection point right here was May 8th, actually. So that was when it officially went bullish in our model there. And then, yeah, ever since then, it's been on a 119% run up. But yeah, I mean, it is interesting just seeing that there. And not only with Ethereum, but small caps have been performing incredibly well. So like, the Russell 2000, if we go to a chart of the Russell, it's interesting how you're seeing a lot of these more, a lot of these different companies who are rate sensitive really start to perform. And it's interesting how, with the onset or the expectation of rate cuts that these things are, front running that when really the rates that companies pay, is on the long end of the curve, meaning that it more so closely follows the 10-year U.S. government bond yield, which has definitely not dropped. I mean, it has weakened, and it is in bearish trend right now. So is the 2-year. So bonds are bearish, right? But it's interesting how just because it's not decreasing at the same time as some of these other things that I guess small caps are front running that, but we'll see what happens from here. We've been talking about how the 10-year, if I was to not even focus on any other chart, the 10-year US government bond yield would be the chart that I would pay attention to if I had to only pick one, only because this is the bond market trying to price in the economy, right? Inflation, growth, all that stuff. And so, if you have this really start to drop off here at an accelerating pace, that could be not only a hint towards rate cuts, but also as well, if it really starts to decelerate from here, that could point to a more, aggressive slowing in the economy. I'm not saying recession, but still, when you see the 10-year start to really decline, you have to keep that in mind, right? And typically, and I saw a lot of people on X saying this, our team isn't saying this, but, a lot of people were bringing up those charts that suggest, hey, when the Fed starts cutting, that's typically when, a recession is close, which is historically true. But we really, since we're in this post-pandemic environment where there's just still a ton of liquidity in the system from the central banks, I think something like that might still be delayed. Possibly towards late 2026. But in any case, yeah, bonds remaining bearish. As of right now, small caps and the market are happy about that because of rate cuts. Even though, you still have the American Association of Individual Investors. So this is what the team and I take a look at in terms of sentiment amongst retail investors. Let me go ahead and change my screen here. And yeah, I mean, that still remains well below 0%, meaning that most retail investors are bearish right now. And I think that was partly, the reason why a lot of people were super bearish heading into the Jackson hole, is because of that. Now, could we continue further down from here? I'm not sure. You did have a pretty decent reaction in the S&P 500 on that meeting. And yeah, I mean, it still remains in bullish trend, right? The bookshelf behind me remains green, which means our model remains bullish on the S&P 500, and it's closing basically near all-time highs. And then you also had Ethereum close at all-time highs. So with bonds bullish, the dollar bullish, you also have 5-year break-even inflation rate continuing to decelerate. Still remains pretty elevated, but when taking a look at this, it's showcasing disinflationary condition sets. This is all just a recipe for the narrative right now, at least, being a soft landing, right? And so yeah, we'll see if it continues from here. Again, our goal isn't to think about the possible risks that are out there and make investment decisions based off of those possible risks that could happen sometime in the future, because if that's the way that you do it, you're going to miss out on a lot of different opportunities. And you could even, if you're super early on a move, even if you end up being correct, if you're early, then you might actually lose money, and it might be the wrong trade there, right? So you always want to make sure that you're following what the markets are saying over a lot of these different narratives. What our team uses the macro data for is in order to confirm some of the longer to medium term trends. And so as of right now, we still see inflation remaining sticky pretty much until October, end of October, November-ish. And so you could still have some volatility return in that time frame with the markets here. So we're not totally out of the way here in terms of, this low volatility environment. Although, with the VIX having that large drop on Friday, you're still well into above or below the 15 level for the VIX, which, I mean, that's just an area where the market just continues higher. And so, yeah, my team and I were taking a lot of profits on things heading into or after that meeting, after the large acceleration there. So yeah, hopefully you guys were positioned accordingly. I know for the people who are in our group, I'm sure you guys definitely had a nice little Friday there, and we're selling some on green. All right, taking a look at some of the other metrics here. This is partly the reason why Powell is a little bit hesitant or inviting of rate cuts, because when you take a look at services consumption, ever since November of 2024, pretty much from August of 2023 till November of 2024, it's remained flat. And then ever since 2025, services consumption has been really decelerating here. So that's a concern, as services make up nearly 70% of all consumption in the United States. Excuse me. And also, too, part of what could be contributing to inflation remaining a little bit sticky here is that M2, the year-over-year rate of change, continues to accelerate here. And we had a large acceleration in June to 5% year over year, which is the highest rate at which M2 has been accelerating to, and ever since, let's see here, pretty much June of 2022. So, yeah, I mean, you're seeing M2 money supply continue to accelerate. We also have durable goods orders on Tuesday, I believe, and that continues to accelerate as well. And then on Wednesday, we have NVIDIA earnings, as well as Alibaba. So yeah, NVIDIA earnings is on Wednesday. Alibaba is on Friday. That'll definitely be interesting. NVIDIA, largest stock in the entire world right now at the timing of this recording. And then also too, you have the yield curve continuing to bull steepen, which typically is when the short end of the curve drops lower or at a faster pace than the long end of the curve. And as you can see for the current phase here, both of which ever since July 15th have been decelerating there. And so a bull steepening is typically when both policies on for monetary, meaning the central banks, and fiscally, meaning the government, are in more of a easing cycle, right? We already know that the government is printing a crazy amount of money with their issuance of bond yields, or I'm sorry, treasury bills in order to fund the government right now, as well as to increase their rate of bond buybacks, which is where they're essentially issuing new debt in order to buy old debt because they're seeing demand start to wane, which is pretty interesting. The past week or the past month of bond auctions at the long end of the curve have not been too great. You've been seeing large tails there, and so yeah, bond yields bearish, dollar remains bearish. All pretty big signals for rate cuts, and then you also have similar aspects of 2021 with Ethereum and Ethereum related cryptocurrencies remaining the most bullish out of all cryptos. You know, a lot of the 2017 cryptocurrencies have been doing pretty well, right? One of my favorites, Chainlink. This one has, been up there with Ethereum performing well, and so yeah, I mean, I wouldn't be surprised if Ethereum-based tokens and cryptocurrencies continue to do well. And part of the way that I look at that is taking a look at dominances, right? So Bitcoin dominance clearly in a bearish trend right now, which normally is a pretty good environment for all altcoins, but in this specific altcoin environment, you also have bearish stablecoin dominance, which again is normally really good for altcoins. But when you take a look at others dominance, which is all other cryptocurrencies, excluding the top 10 in terms of size, market cap, that really hasn't been having too much of an acceleration here, right? I mean, it's in a neutral trend, but it's definitely not having a large acceleration. Where you're seeing that is in DeFi. So this is the total market cap for decentralized finance tokens. So yep, it's Ethereum season and it's DeFi season right now in terms of the markets. So yes, that is pretty much all I'm looking at here. Again, I apologize for those who are joining our stream. Had some technical difficulties with audio. Hopefully we'll have that figured out next time. But yeah, the way that these Sunday macro wrap-ups work is that the first 30 minutes is streamed on our socials, and then the next 30 to 45 minutes is only for our Macro Optics members, which is offline. So we have people joining on our Zoom right now. If you guys would want to have any interest in joining that, you can take a look at the links below for the 7-day free trial there. So, all right, well, with that being said, for those on the Zoom call, stick around. We're going to go ahead and say bye to people on YouTube and on our other socials. So appreciate everyone for joining. Good luck out there, and we will catch you in the next live stream. Bye, everyone.